In this week's episode, let's give your S Corporation a mini makeover. These 5 cleanup items will save you thousands of dollars and hours of frustration and get you ready for when your CPA calls. Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy, we decode everything it takes to run a thriving creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Hi, welcome back, guys. Okay, so we're right on the cusp of the busy season where we just have to power through. So with that being said, even if everything is filed on time, are there still things that can be off? Like if you're relatively prepared, but can there still be things that are off?
Right. Yeah, definitely. There's things where you can think that everything is ready to go, but then you send it over to your tax preparer and they say, nope, we're going to have problems. And unfortunately, we're not going to be able to file on time because it's going to take too long to get this fixed. And like you said, there's not really a lot of time on a lot of tax preparers' plates right now. So if you aren't making sure that these things are ready to go when you submit your paperwork, basically need to request an extension at that point in time just to make sure that everything is all clean. So I wanted to go over what even are those items?
Yeah, what is that?
What are the things that we're finding that we have trouble with? And a lot of it has to do with the financials.
Okay.
So when I accept financials or a QuickBooks account from a business owner and I haven't been doing their bookkeeping, I'm going to go through a pretty thorough check of their financials just to make sure. So because I'm an enrolled agent, I'm not part of the IRS, so I don't have to tell on anybody or, anything like that. It's all kind of between us. But at the same time, I do have to make a reasonable effort to confirm that the information that I am providing the IRS is correct.
That's fair.
So when I go through the financials, I'm going to have to make sure that it makes sense to me, that I'm asking all of the correct questions, that I'm making sure that everything is in the correct bucket. And like I said, it's very important for me to make sure that you are audit ready from the very beginning. Because when they have 3 years to audit you, I don't want to go back in 3 years' time when I don't really understand.
I don't know what
I want to make sure future me has everything that they need in order to provide the IRS what they're requesting. So making sure that these items are identified and resolved before you're handing them to the CPA means that you're still able to meet that original deadline when you would like to file your tax returns. And sometimes I say, even if you want to get an extension and you're not planning on having it ready, you still have to pay the full tax due April 15th. And also, just because you file an extension doesn't mean that you shouldn't know how much tax you owe. So making sure that you're able to plan ahead, have the cash flow. If you would like to put money into a Roth or a SEP IRA, you're able to make those decisions very quickly. But I can only provide you that feedback if your financials are good to go.
Okay. Yeah, that makes sense.
One of the first things.
How do you start? When you dive in, where do you usually start?
I know. So one of the first things is going to be making sure that you have all of the transactions in the system.
That is fair. That's a good beginning.
So, right.
Do you have all the activity?
Right. And the way that we do that is reconciling the bank account. So I know that that's in the accounting world. Every single company does this, from Fortune 500, international companies, all the way down to your company. You should be reconciling your bank accounts. And so what that is you have your accounting software and it's reporting all of the activity. What we're going to do is we're going to take that PDF statement from your bank that shows all of the activity. It shows the beginning balance, shows all of the activity, and then your ending balance. And that's the official paperwork from the bank. And we're going to go to your accounting software and we're going to make sure that it matches.
Yes.
And anywhere that it doesn't match, we're going to want to know why. So, I mean, and it can be different if you wrote somebody a check and they haven't cashed it.
Yep.
Your accounting software is going to be different from your bank account, but that doesn't mean that it's a bad thing. But one of the things that we're really looking for is sometimes the links between the bank account and your accounting software are updated. And when they're updated, they can unlink from each other. Or, I mean, I know American Express makes you re-sign in to authenticate yourself once every 90 days. So I mean, it's great.
It's good. It's good.
It's a great security measure, but
no activity's been pulling through.
Exactly. Or if you take too long, maybe it doesn't go back far enough and you missed a month.
Yeah.
And so a lot of times I can see that, especially if you only do your books once a year when it's tax filing.
Yeah.
Very possible that one of those bank accounts stopped taking in the transactions. And when you logged back in, it relinked the banks and it pulled all of the information in, but it didn't go far back enough.
Yeah.
So that's where we end up with bank accounts that are negative. You know, I mean, I found one where their payments for their invoices were going to this like fake cash account that because, you know, they weren't attributing, it was in Waze or Wave, and they were using the wrong payment, the wrong deposit account on all of their invoices. So all of their deposits were going into one bank account, but all of the deposits were going into their regular bank account.
Yeah.
So then they had duplicated 100% of their income.
Yeah.
Because they marked the invoice as paid, and then they also deposited the cash using two different bank accounts. So now all of their income is duplicated.
Yeah.
So that's super easy. Their credit cards.
Yeah.
Negative balances.
Multiple credit cards, making sure the payments are going to the right credit card account. Yeah, those were fun. Yeah.
So making sure that you are going through and reconciling all of those bank accounts and comparing them to the official documents from the banking institution and your accounting software to make sure that they both match up. And a lot of times I'll ask for the December statement and say, okay, does the amount at the end of December actually match the amount that's in here? And if they don't match, then now we have to start digging in to see why that is.
That makes sense. That kind of goes along with it of like accounting being a lot of checks and balances. Like you're just checking and making sure everything is actually there. Yeah.
Right. Exactly. Yeah. And it is industry standard what we're doing there. I have never been in a company that hasn't done this.
Yeah.
So it's an extra step that, you know, a lot of business owners will say, well, it's already linked. So you're getting all of the transactions anyways. Why do I need to provide you with a second piece of paper? And, you know, so number one, what every accountant should be doing. And it's also in your best interest to just make sure that nothing is actually missing and that when there are differences, we are identifying them and making sure that they're all kind of cleaned up.
Yeah.
So,
because when there's not, it's like 5 minutes. Like if it's like everything's in there, you got the beginning, got the ending, everything matches. It's like a boop, boop. And like, yeah, we're good to go. So no, that's good.
So the other thing that I'm looking at is on the profit and loss report.
Okay.
So is everything actually categorized in the correct buckets?
Oh, yeah.
So, you know, some of the softwares will create an uncategorized expense account or an account that says, ask my accountant.
I always think that one's so funny because it's like, do we know? Like, we got to ask you. Yeah.
So, or like there'll be like uncategorized assets in there.
Uncategorized income.
So everything, we call it categorizing, but we have to identify, where does this belong? What was the purpose of this? And when we report this information to the IRS, there is only a limited number of boxes.
Yeah.
So I also want to make sure that everything fits into those classifications or could be reported as its own classification, but I don't want to send them like this huge, big, long list. And if something says miscellaneous, I'm automatically, it has to belong, it has to find its home.
Yeah.
I'm not going to report something that says miscellaneous because then what was the business purpose? Miscellaneous is like, I just got it randomly for whatever reason.
Yeah.
So that's where we're really going through and identifying, is every single expense that's reported on the profit and loss a necessary expense? And if it falls into one of these uncategorized classes, then I don't know.
Yeah.
So where does it actually go? So you need to make sure that everything is in its correct home. So the first time, once I open it up, if there's something and ask my accountant, it's fine. I'll see it every once in a while, but it has a description in there because it is a legitimate question that they're asking.
Oh, they're actually, okay. Yeah. I haven't always seen it where they ask it. It's just like this random charge that they made. And then I'm just like, but I don't know what this is either. You got to tell me a little bit more. Yeah.
Exactly.
So if there's a description, that makes sense then of like, I don't know where I should put this. Yeah.
Yep.
Yeah. Okay.
So if you're really unsure or you think it's a gray area that maybe we need to discuss, just put that into the description so that I already know, because this is going to be one of the things that we have to talk about before I'll move forward with your tax return. So if you can have that ready for me, then we can kind of move forward really nice and easy, or I can see it and you know, put it in its correct home. But just making sure that everything is in its actual home and that there's not anything that has like an unclear reason.
That's fair.
Because like I said, I want it to be audit proof. I want to be able to use your financials to tell a story to the IRS that represents what's actually happening in your business day to day. And if there's a whole bunch of things that are just like random expenses, then it's a lot harder for me to substantiate the purpose for why you had to spend that money in order for your business to continue operating.
Yeah. I think I've overheard you with like your trainings and stuff about consistency as well, of like, if you're going to put something in the bucket, like, and it's the same thing over and over, make sure you keep it in that bucket unless there's like some actual other reason that's like very specific. But yeah, so that way you don't have Adobe in like dues and subscriptions, but also like office supplies and like, but like being consistent as well.
Right. If I'm going to be wrong, I want to be wrong every time.
Just put it, if you don't know, put it into the one and then make sure you just stay consistent. Yeah.
Right. We can flag it out, but it's because if it is wrong, at least I know where to go. And it's not all over the place.
To reclassify later.
So sometimes it is just make a decision, you know, and we can go over that decision and determine whether or not that was right or wrong. But as long as it's always been treated exactly the same, then we know where we can look and we can easily clean that up. Quick, and it's just like one little button, I can move it and we're good to go. Versus, like you said, if I have to go digging around for all of these things, I don't have time to dig. So you're going to get an extension, unfortunately. So.
I mean, that makes sense. So what else do you look at? So you got the P&L, balance sheet, if you have one. I'm assuming you got to check there because that can always have some fun doozies.
And then I'm also going to check your payroll.
Oh, yeah. Because that's
so payroll is reported to the IRS on a quarterly basis and then also on an annual basis. So if we're already reporting one number, then I want to make sure that your tax return also says the same exact number.
That is fair. Yeah.
So I'm going to look at what are the numbers that you have on your profit and loss, or, you know, if you have a payroll liability, what that looks like, and then also compare it to the reporting that you get directly from your payroll provider, or if you don't have it, you know, the quarterly reports and the W-2s and things like that. So what I'm looking for is, do the wages match? So, and the taxes. And that's one of the biggest mismatches that I see, is because when a payroll provider remits the payroll, what they'll do is they'll take two separate withdrawals. So one withdrawal is for the net check that's going to be deposited into your employee's bank account. And then the other one is for all the taxes, and that's going to go to the IRS and to the state. But what I see is people will say, okay, the net check goes to wages, and then the taxes goes to payroll taxes. But that tax number includes the employee's portion and their withholding. So now we're under-reporting their wages and over-reporting the taxes. So we have a mismatch between the reporting that you provided every quarter to the IRS. So making sure that that's correct, and also that the way that you're defining payroll matches. So what I'll see too pretty frequently is that as corporation owners will take a withdrawal. They'll say, okay, this is my monthly payroll because it's my monthly, like my budgeted monthly allotment of what I'm going to pay myself. But it didn't go through the payroll system.
Oh, okay.
And they didn't issue themselves a W-2. So really that's a distribution.
Yeah.
They only gave themselves. So yes, they did pay themselves, but they didn't pay themselves payroll. So again, they're not issuing a W-2.
They didn't pay any taxes against the money that they took yet. Okay.
So those need to be categorized as a distribution. So it's just making sure that everybody is clear on what should be in those boxes, and that they match the other information that we're reporting to the IRS and the state entities there. So going through, making sure that you have payroll.
And that it's recorded correctly.
So I'll want your profit and loss, your balance sheet, your last month's bank statements, and then also the general ledger, or the payroll summary from your payroll provider. And I mean, like my list can get pretty long. I think there's like 50 different things that I'm looking for, because I'm looking at, okay, are all of your assets categorized properly, or do you have like a $4,000 item that you're putting to office expenses that, we want to make sure. A lot of times with the IRS, it's about you reporting the items properly.
Gotcha. Yeah.
So just making sure that we have that. And if there is additional documentation needed, that we're making sure that you have that information already saved in your file. So we're not kind of like rushing behind the scenes, So also, when we're talking about distributions and things like that, we want to make sure that you're also taking into account your accountable plan.
Okay.
So the accountable plan is a method for an employee to submit expenses that they paid for with their own personal funds, and have the business reimburse them for it. So, like I said, like with the distribution, maybe it's the rent for renting office space, or for you have all of your gear stored in your garage, So the S corporation is paying you for those rental services. Is that actually categorized as rent? And are you recognizing that on your profit and loss? Or were they all just, because they were transfers, the bookkeeper just put it over into distributions because there wasn't any receipts or
to like
documentation
know what that is.
To show. So especially before I file the return, I want to just triple check, are there any other expenses that the business incurred that maybe they haven't, that you haven't submitted for reimbursement yet.
Yeah.
So making sure that you have all of the expenses ready to go, because that's also too, people are creatures of habit.
Yes.
So I can look at how much did you spend last year versus how much did you spend this year? And barring any major lifestyle changes, maybe you moved across the country or something like that. If nothing like that happened, the year was really exactly the same that it was last year, you'll probably end up falling in the same in the same range as you did the prior year. So making sure that you have all of those expenses and they're all recorded and recognized is really going to help, because if I look at your financials and there's a wild difference, so for example, let's say you got a new credit card, it gives you like really great travel points. I know that you need to travel because you're touring with an artist, so you have a lot of travel, and I look at your travel, and because it's all on this credit card that isn't linked to the accounting software, your travel says that you only, spent like $100 or something silly, but the prior year you spent $20,000.
Yeah, you're like, something isn't matching here. Yeah.
So, and that's too, the IRS, their big thing is in that taxpayer bill of rights, you have the right to pay only the correct amount of tax. So I want to make sure that, again, the financials that we're providing and the story that we're telling actually matches the operations of your business. And if you are using your personal funds to pay for all of these business expenses and you haven't recorded all of those reimbursements properly, there's going to be a mismatch. And especially in that mismatch, the IRS is going to say like, okay, well, if you're not claiming them as an ordinary and necessary business expense, then obviously you never needed it. So
So just being very careful
it's really, really making sure that you are recording all of the expenses and taking the time to go through your personal cards to make sure that you've recorded all of those reimbursements properly is going to be very important.
So let's say it's end of December and we have one of those clients that basically said that they did payroll, but really they were distributions. Is it too late if we're still in December to potentially like fix it? Or like, where's that cutoff time to like make sure that they process like a real payroll if that's part of like the plan to do so?
So most of the payroll providers will require that you run the payroll before the end of September.
Oh, okay.
But it is still possible to file all of that information manually.
Okay.
So you do have a little bit of time into January to be able to do that. Any further than that, you would be subject to late fees and penalties.
Like you were supposed to do it and you didn't kind of thing?
Right, no? Because when you're saying that you're running payroll on December 31st, so if you don't pay those payroll taxes until February sometime, those are late, and then you're going to have late penalties and interest and all of that fun stuff. So you want to do it in December as much as possible, or as close to December as you can. So even if it's like January 5th, that's not necessarily too late to do that, but you do want to make sure, like you said, that you're checking it early December. But really early December is when we're making sure that you've hit your reasonable compensation requirements. And, we do some fun things with payroll, and, all of that. So,
okay, cool. No, that makes sense. So let's say you're getting to like, we're still in December. You don't want to like overspend, but like you have some, like you want to reduce your taxes and it's in December. Like what can you kind of do potentially there?
I think really a lot of it is going through your financials and having somebody look at them, like the sooner the better. Because like I said, I can really quickly see when something doesn't really make sense. So making sure that you are taking the time over the holiday break, just wrapping everything up and then getting it over as soon as possible is going to be really super helpful. And if, let's say it's after the first of the year, so you can't really spend more in the year, you can still fund some of these retirement accounts. So with an S corporation, it is going to require that you're in payroll. But single member LLCs and partnerships have a little bit more leeway with that. So I wouldn't just rush to spend a whole bunch of money in December. The rush is more, let's make sure that everything is categorized properly so that if there is anything that makes sense to act on right now, that we're doing that. And then everything else can kind of wait until the beginning of the year. But again, a lot of it is that idea that time is money. So if you're going through and you're making sure that the banks are reconciled, that every expense has its own special home, and that, your expenses that you paid for with your personal funds are recorded under your accountable plan, and you've ran payroll, you are already going to be in a really, really good position. And I mean, I always tease.
Like a really nice ideal client. You're like, oh, everything's ready.
And I always tease, because opening up your finances can be like a very vulnerable situation, where people, like, am I going to be judged for, have I been doing it right? But I always say there's always somebody who is in a worse position than you, so if you're even doing one of these things, you're probably ahead of, 50% of, so no matter what, there's always someone who is in a worse situation and more behind, and we still love them to death, so just sometimes you're not a type A personality, and that is 100% fine. And we deal with that all the time. So maybe instead of, reconciling the banks, you just save all the PDFs and you have it ready for us, and it's ready to go. And we're not like having to chase you for weeks because saving 40 different, PDFs is really annoying, but definitely going through, making sure that it has a home, that you have the description, that you've processed your payroll. Those are going to be really huge pieces that we need to make sure we have if you want to be able to file on time and have your tax liability presented to you with enough time for you to act on it. So that you're not, because I always, I'll see where if you are always kind of playing catch up, then that also happens with your tax payment. And then you're constantly in this hamster wheel of trying to catch up. So the way to get you out of that hamster wheel is, let's make sure that we have all of this information as quickly as possible. And then that way we can create a strategy around it, because maybe the tax liability hasn't changed, but if you know about it 6 months before, then it's a lot easier to kind of adjust your life around that instead of
plan for it.
Getting on an installment plan, and then you're on an installment plan forever, and you can never catch up because you're having to pay last year's taxes and this year's taxes and all of that fun stuff. So especially as we come to the end of the year, just making sure that all of these items are at least kind of in your mind and identified in some way are going to give us the opportunity to be able to act on them. And if you listen to this and you say, I have no idea what any of that is.
There are people out there that will do it for you.
Exactly.
Not to name names or anything. It might be us.
I mean, I am in this industry because that's what I like to do. So, if anything, like I said, I prefer to do it, and then that way I can get it done. I can get it over really nice and quick, and then we can move forward. So,
No, I love that. Especially, because we get into our habits. So we like the things to look a certain way too, of just like, okay, like if I'm going to do this, I want it to look like this. So that way it's very easily translates over into the tax return. So getting our hands on it earlier is always nice.
Right. And like you said, that, the consistency, making sure that everything is really consistent, that it makes sense with the story that we're telling on your tax return. So just going through and making sure that it actually does follow along with kind of what you're telling me is a good thing, because these systems, they break down, and every system does. So that's why, like you said, you have the checks and balances in accounting. It's all about debits and credits. So there's always should be that second set of eyes that's checking up on things. So even if you are really nicely doing everything every single month and reviewing it, it's still good to go through towards the end of the year. Just make sure that all of these items are set up, done properly, or at least flagged out to your CPA if you really want to make sure that you are filing on time and making those tax payments, because if any one of these breaks down, it's very possible that we would be getting an extension for you.
Okay. Makes sense.
Yeah. So if you have any more questions about what you should be focusing on to make sure that your financials and your business information is ready to hand off to your CPA so you can file on time and know how much you actually owe in taxes, put a comment below or send us an email and we can walk through your financials.
Bye, you guys.
That's a wrap on Let's Get Fiscal. Ready to stop guessing and start saving? Click the link in the show notes.
Grab your consult and let's make your business work for you,
not the other way around. You've got this.